Good afternoon or good evening, depending where you are in Europe or the rest of the world. Thanks for joining us today and welcome to our latest webinar. All our previous webinars are on our Joseph Mews YouTube channel, and we focus on a particular topic of property investment, mortgages and investing from overseas. Today, we've got locations, taxation, limited company structures, different types of lettings, short-term, long-term. So there's quite a lot of content there. So have a look at that. Today I can see we've got a lot of new attendees. So I'm just going to give you a little bit of information about us, and then I'm going to hand you over to Faye Adams. She's our overseas mortgage expert. She's from Peritus Finance, and she's going to look at options and a case study just to give you an idea for those looking to mortgage their UK investment. We've got thousands of clients based all over the world. Offices here in Birmingham, Dubai, South Africa. 70% of our clients, wherever they're based in the world, are buying with mortgages. And I think a lot of clients we found don't realise how straightforward, cost-effective, and easy it is if you're living overseas, whether you're expat or local, to get a UK mortgage. So that'll be the main sort of thrust of today, if you like. The UK is the most invested country in the world for overseas investors, and I'll explain why that is. My name's Andrew Siegel. I'm the managing partner here at Joseph Mews. As I say, run through a couple of slides to tell you a little bit about us. Going to have a little update on the property market, and then I'm going to introduce you to Faye, who'll look at the mortgage options for overseas clients. We found one of the most popular elements of the webinars is a question and answer session. So you'll see a box somewhere on the bottom of the screen. So as we go through, if there's any particular questions to do with obviously mortgages, financing, property, anything property related, we'll have a little panel and a Q&A session at the end there. So happy to cover that. If I could have the next slide, please. Thank you. So just a little bit of history, a little bit of background. We started by the chap on your right-hand side there, Andy Foote, who's our chairman. And he, 1999, had a bad experience buying abroad. He was in the UK, bought in Andalusia, bought in southern Spain, off plan. He's still got the property today. It's worked very well for him, but the experience wasn't so good in terms of the customer service, the management, the lettings, the furnishings, all the things that we do really. So there was not a lot of communication, not very transparent, no guidance, bit of a disaster. So he said, surely we can make this a lot better experience for our clients, wherever they're based in the world. So when he set the company up, sort of customer care side and the service side was put first and foremost. And I think our sort of track record speaks for itself. We were a distribution partner, or are a big distribution partner for big developers in the UK. And then about 4 or 5 years ago, we transitioned into Joseph Mews, so we could work with other developers, and I'll explain what that is and how that works in a second. But it just allows us to work with the best developers in the UK, access the best stock in the country, and in turn give our investors what we believe are the best opportunities out there. If I could have the next slide, please. Thank you. So I mentioned we've got a good track record. We've marketed, sold, and more importantly, delivered over 4,200 units. And that's across 43 different developments in different parts of the UK. And I'll come on to locations and things like that in a minute. Got a lot of repeat purchases, those clients that can do repeat purchase with us because we look after them. And we've delivered over £500 million of apartments, value in apartments to our clients. If I could have the next slide, please. Again, the sort of the Knight Franks and the JLLs might be familiar to people out there. They're multi-billion dollar turnover companies. They're not developers as such, but they work with developers. And Knight Frank and JLL then get involved on the sales and the support side of things, and they outsource that to us. So a big feather in our cap is having the Knight Franks, the JLLs that partner with us to sell developers that they've helped possibly fund or get through planning or sell the land to. Then on top left there, we've got Elevate. So the middle row and the bottom row and Elevate Group. These are individual property developers. We partner with them, so we joint venture with them. So the developers will get on and do the build, and we do the rest. And I'll explain what the rest is in a minute. And Elevate, for example, one of the most awarded developers in the UK. So all of these companies, Second Group, HBD, we've done a lot of due diligence. We've worked with them for many years. They're well funded, they're safe and secure, etc. Next slide, please. It's whether you're local, national, or international, there's a sort of a journey to go through, really, and that's what we put in place and what Andy put in place back in the day. So if you see something you like, you reserve it, then we get you to exchange. Then there might be a 15-month window, maybe an 18-month window if it's off plan and it's something that's being built. So not only do we do sales and marketing, of course, which is not rocket science, it's pretty straightforward, but the getting you to exchange, we have different panel solicitors, specialist mortgage brokers, whether you're onshore or offshore. We do all the customer care, we do the handover, we do the snagging, any warranty work. We've got furniture packs, as I say, solicitors, the whole 9 yards. So we're a one-stop shop, which is why developers choose us, because we give them a good name, because we give a good customer experience, and it's why our investor clients like us. Again, we've got a good track record, and we take you through the whole journey. It's just one phone number for the support staff, and everyone's geared up to look after our clients. And that sort of customer experience, I think, is really what sets us apart. If I could have the next slide, please. Just a reminder, Q&A in the bottom there. Just put any questions in and we'll cover that at the end. If I could have the next slide, please. Okay, we'll just try and make it a little bit interactive. There'll be a few little multiple choice questions here. So what's your primary objective for investing in the UK market? And again, tick one of the boxes. We'll have a look there and just get a feel for what you guys are looking for. So building capital appreciation, as we know, property price is only going one way. Generating a passive income through rental income, creating a long-term investment portfolio, or more immediate returns. So we can just tick the box and we'll have a look at that and see what we're saying. Thank you. Okay, so interesting. So I've got 0% looking at capital appreciation. Okay, that's cool. 80% generating passive income through rental income. So it's an income generator. No one's looking at creating a long-term investment, and we've got 20% there looking at immediate returns. Thanks for that. We normally see a little bit more in terms of capital appreciation, but I'll come on to that, and we'll look at rental yields and we'll look at capital appreciation as well. If I go to the next slide, please. So just a couple of slides looking at the UK market and the property market in general. So I can have the next slide, please. We always get asked about, one thing that I always get asked about is rental voids, which we never see, and I'll come on to that, but also about the market in general. We said no one's interested in capital appreciation, but for me, and for a lot of investors, capital appreciation is important. The UK market, I mentioned earlier, is the most invested market in the world for overseas investors. It's a very mature market. You've got English law, which is strong. So investors, wherever they're based, are very well protected. As we can see here, for me, investing is all about maths, and property prices on average have doubled every 13 years. So whilst you may not be interested in the capital appreciation, it's something that you'll get. And you can see from the graph, it's a nice sort of steady growth, nice sort of steady period. As you can see, if you're in it for the long haul, you're fine. I remember buying at the top of the market there when we had the financial crisis, 2007, 2008. The worst sort of drop we've ever had, really, whether it's Trump, Ukraine war, Brexit, COVID. It's just that spike there of 10%. And I bought at the very top of the market. People always ask, when should I buy? best time to buy now. Doesn't matter what the price is, because if you look at over longer term, we know, and I've got some stats which show that support this continued capital appreciation. So the properties I bought in 2007, 2008 took a little hit for 6 months a year, but guess what? I've still got those properties, and some of them have trebled in value since then. Nearly all of them at least doubled in value. So we want to be in it for the long haul. I recommend at least 5 years. Maybe you've got taxes, stamp duty, setup costs potentially, but at least 5 years will give you a good return. Obviously, if you need to exit, if something's happened and you need to exit sooner, then of course you can do that. And we're there as well, should you wish to sell your investment. We talk about in the UK supply and demand. And again, I don't know in terms of the audience, how sort of closely you follow the UK market. And if you just Google UK property shortage crisis, it's all about supply and demand. In the UK, we should be building 310,000 homes a year. We're only building 200,000 homes a year. And that's been going on for decades and decades and decades. And despite what the Labour government said that they want to turn this around and build 1.5 million new homes, we're building less now than we did when the Conservatives were in. So that supply and demand dynamic is, we're a small island, planning laws are quite restrictive, so it's good for us. I've never known it, as a property investor myself, the market to be so strong in terms of rental yields and indeed the capital appreciation. So even if we started building the numbers we should be building today, never happened, it's going to be 50 years before that supply and demand balance catches up, which is why, as we'll see, rents are shooting up, and one reason why the property prices are shooting up as well. And then by 2035, we're going to have another 7 million people in the UK, organic growth, population growth. So again, super important to, all this data is out there. We do lots of reports and information, but it's important to get an understanding of where the market's been and where we believe it's going as well. If I can have the next slide, please. Okay, again, high demand, low supply of UK property. I mentioned we work with the Savills, JLL, Knight Frank. These guys have got tens and tens of people just working on research, plenty of reports, looking at where the market's going. And I'll come on to that in terms of rental yields and capital appreciation. But it's very strong due to the simple supply and demand dynamics. And we're seeing people want to maybe move out of the city centre. We're still seeing working from home, so people can be further out of the office if they're only going in once a month or once a week or once every 2 weeks. So that sort of dynamic has changed. We're seeing tenants want larger spaces, potentially with facilities, or certainly in the right location with facilities. So again, it's a strong market with a positive future. Next slide, please. Okay, so let's have another quick poll. What's your biggest fear when it comes to investing in UK property? Just choose one. Potential changes in government regulation and taxes, interest rates affecting mortgage affordability, difficult finding suitable tenants, and unexpected maintenance costs or repairs. We got taxes, interest, tenants, costs. Okay. So have a fill that in. We'll take a look there. See what we're saying. So potential changes in government regulation taxes, that's 40%. Okay. Yeah, look, we are paying more taxes, and stamp duty has gone up. So there are more taxes to pay. It's pretty, I think we know where we are, certainly where we're going to be for the next few years. We've had a gradual increase in things like stamp duties and a sort of decrease in things like the way you can claim mortgage tax relief. However, the market doesn't stay still long, so you can invest now in a limited company, so you can claim a lot of expenses, including interest rate on your mortgages. So there's a lot more things that you can do, if you like, that will, again, we talk about gross yields, which is one thing, but we want to look at net yields. Gross yield could be £1 million, but if you're only left with a £5 a month in your back pocket, £1 million doesn't mean anything. So we always look at net yields, and we've got ways of working with partners like Faye that will get the best interest rates, looking at different type of company structures that will give you a much higher net return. Interest rates affecting mortgage affordability. Again, Faye will talk about that, but yes, obviously back in the days when we were 0.5% or whatever we were with the bank rate, we're up higher. But as we've seen, and Faye will demonstrate, rates are coming down, and we believe we're expected to come down as well. And no one's worried about suitable tenants, which is fine. Again, massive shortage of housing. We put stuff on to rent today, it goes tomorrow, so that's not an issue. And then we've got unexpected maintenance costs and repairs. What we offer predominantly is housing, and it's all brand new. So you've got 10-year build warranties, for example. Everything's new. You've got 2 years on all the appliances. And there is something in the UK called a service charge, which covers all the maintenance and repairs and everything of the building, roof. If in 20 years' time, it needs, I don't know, a bit of work done on the roof or whatever, then you're covered. So you can control and manage those costs with the service charge, and that's quite important. And there are changes being made which keep those service charges to a minimum and very much an acceptable level, because the service charge is paid by you. The utilities are paid by your tenant that's actually living in the apartment. So again, I think we can probably answer that, and again, probably allay any fears there as well. So thanks for that. If I get that one closed, and I could have the next slide, please. Again, we've got a development in Wakefield. I spoke to a lady up there that had a 3-bedroom house. She put it on the market. This was October last year. She had 850 inquiries for viewings. She's bought from us the apartments in Wakefield. So she was telling me her story. So again, I see it myself. I'm old. I started investing with my dad when I was 19. Dad's now 92, still 92, yeah, still investing. And I've never seen the rent so high. We've got people with something in the UK called gazumping, which used to happen to property prices. It used to happen to property sales. So I'd see an apartment, I'd offer on it, I'd get the offer accepted. Someone would come along and offer more. And that's normal-ish, frowned upon, but it's normal-ish when you're selling homes or buying homes. It's now happening in the rental market because there's a shortage of stock. So people are paying 12 months up front. If I've got something on the market for 2,000, they're offering me £2,200 per month. Again, you can do your research. Just have a look at these, all the different reports out there that talk about capital appreciation, but more importantly, the rental yield increase as well. If I could have the next slide, please. Thank you. And again, I mentioned the JLLs, the Knight Franks, and the Savills. These are reports that this came out end of last year. So again, UK house prediction, pay is rising in the UK, interest rates are falling. Again, us, but more importantly, the PLCs with all the research academics saying, and we've seen it, they were estimated something like 0.5% growth a month-ish from January. It's actually been more than that. With every development we've ever launched, has always been incrementally more expensive, has increased in price, and we expect that trend to continue. If I could have the next slide, please. Okay, I'm going to hand you over to Faye, and she's going to run through mortgages and bits and bobs. Then we'll come back on. I'm going to mention a little bit about a couple of developments we've got, and then we'll get into the Q&A. Thanks, Faye.
Lovely. Thank you, Andrew. So good evening, everyone. Thank you for joining the webinar. So I will be covering the mortgage market and how it's looking for all you lovely overseas investors, just looking to start expanding your portfolio here in the UK property market. So I'll start by giving you a little bit of an introduction on Peritus International and a little bit about myself. So we are a whole of market brokerage firm, which means we can't be beaten. We have around 80 lenders in the UK that we can access, and we're also regulated by the Financial Conduct Authority. What that means is although you may be overseas, you are protected as if you're on UK soil against our advice. So with my background, I specialise in clients residing or temporarily overseas, looking to invest here in the UK. So whether that be for personal usage or investment, whether you want a UK base for you and your family's use, or some people have children studying here in the UK, wish to buy a property for their children's use rather than renting, or just buying for pure investment basis only and to get that rental income and capital appreciation, we can help. So another thing is I also specialise in Sharia financing. So if you do follow Sharia law and are of Muslim faith, you'll be happy to know I can help you with Sharia financing too. So I do understand the difficulties you may face, but I am here to help guide you and show you that it is possible whilst getting you the best mortgage for your circumstances. And the best part of it as well is I'm fully independent. So I work for you. So we give you expert, impartial and professional advice to make sure you reach your objectives and goals. So we can even look at contents insurance for you. In the poll just now, some of you were worried about maintenance, and as Andrew mentioned, you've got your building warranty for 10 years, you've got your service charge, but even if you are worried, we can look at contents insurance for you. So that just gives you added protection. So I don't have any country restrictions at all, apart from Russia at the moment. So wherever you are in the world, I can help. Okay, next slide, please. So this is a poll. So the question is, what do you think is the biggest challenge in getting a mortgage here as an overseas investor? So do you think it's lack of credit history in the UK, opening a UK bank account, limited lender options, or complicated application process? Lovely. Okay, so bit of a mixed bag. So lack of credit history in the UK. You'd be surprised to know you don't need any credit history in the UK with some lenders. I have mortgage people that have never set foot in the UK, not got a bank account at all. Some lenders will actually look at your credit history in your country of residence. So some countries have the credit reports that they can be provided to the lenders to show that you are creditworthy in your country of residence. So it really isn't a problem that you have no credit history here in the UK. When you do buy your first property, you will get a credit history with a mortgage, and that does build up more trust from the lenders if you go to buy other properties, that there may be other lenders available to you. So the first one I always say is the one to get your foot in the door, but then more lenders will open up as you do build a credit history in the UK, but it's not a problem for your initial purchase at all. Opening a UK bank account, again, that's something we can help with. Some banks will actually set them up for you. Some are offshore, like Isle of Man. But as we have that consultation, like Andrew said, we're a one-stop shop. We will look after everything for you and can guide you into opening that UK bank account. You will need a UK bank account before we can apply for a mortgage, but you will have your consultation with me so I can help guide you in that step as well. Limited lender options. So there are plenty of lenders. They know that people overseas want to invest here in the UK and the banks want that business. So they're opening up and expanding. There's lots of little building societies that are really interested in expats and foreign investors investing here in the UK. I predominantly do overseas, and I've never seen a shortage, only a growth in these options becoming available because everybody wants a piece of the pie. Complicated application process. That's great because we take all the stress for you. We do all the mortgage for you. You don't need to fly to the UK. All I need is your documents that I would request, which is almost like a proof of address, so a utility bill, bank statement to prove who you are, copy of your passport, and some income proof and bank statements. I will handle the whole application for you, liaising with Joseph Mews, liaising with the solicitor and the lender. So the complicated application process is taken away by us. Okay, thank you. Next slide, please. Okay, so here's a few questions that we come across. So I'll just go through them high level. So can I get a mortgage for my UK property purchase? Absolutely. I do it every single day and I love it. So you meet some weird and wonderful people in all different countries, circumstances. It's very, very rare that we can't help anybody. So I know personally that there's no issues. We'd always advise on a consultation, of course, because we can, tailor it to you and what you want from a mortgage. So how do I become mortgage ready? As I mentioned previously, to get a UK bank account, but we'd have a consultation. I guide you first. You're not on your own. So mortgage ready is have a UK bank account. Find out if you're purchasing in a personal name or a limited company, which I'll touch on in a moment, because you may need to get your limited company set up and your limited company bank account. Again, I'll help with that as well. So what costs are involved with buying through a mortgage? So I'll touch on that in the future as well, but you can see things like lender arrangement fees, which most of them can be added to the mortgage. So you're not actually paying them up front. We can add them into your mortgage. You will have your solicitor's costs, stamp duty that Andrew touched on, valuation fee, where the lender will instruct an independent surveyor to value the property to make sure it's mortgageable and safe. And then we have a broker fee where I will act on your behalf and do all that mortgage for you, as I mentioned. How many options do I have? Depends on your circumstances. So some people will think, oh, I've got no options because I'm 65. Not a problem. Some lenders take you up to the age of 100, believe it or not, because the rent is paying for the mortgage, not you. So it also depends on your income, what country you're in. If you're in a higher risk country than others, you may not have as many options. So for the overseas market, we've had up to 40 lenders and there's 80 in the UK. So it just shows you how many people, half of the lenders want the business. It just means which criteria fits you best. And then I will make the recommendation and the cheapest interest rate and product for you. So what are the factors affecting mortgage eligibility and interest rates? A bit of what I just touched on. It will be, down to income. So some people may not have any income and just have a pension income, for example, and no job. You may be a first-time investor. You may have adverse credit in your country. So it depends on your circumstances, but there will be a mortgage for you. And then speaking to a mortgage broker to help find the best mortgage. That's what we're here for. That's what we do best. So we'd always advise on a consultation to set your expectations and get the objectives and goals, what you need from your mortgage. Okay, next slide, please. Okay, what are the costs? So I said I'd touch on this, but beyond the UK property purchase. So you have your deposit. Initial deposit, we recommend 25%. So that's where all of the lenders will become available. There are some lenders that can, if you put more deposit, may become available. So it reduces their risk. There's more equity in the property. But 25% is the minimum deposit needed to obtain an overseas buy-to-let mortgage. You have your stamp duty, land tax, which Andrew touched on, which your solicitor will also quote you. So it does depend on your circumstances. If you're overseas, if you're coming back to the UK to maybe live within a certain period, you can claim some of it back. So you do have your stamp duty, land tax, which is payable on completion. Conveyancing fees. That stamp duty is part of the conveyancing fee. So your solicitor will quote you separately, and then you will pay your conveyancer as well. So they act on your behalf and they do the transaction with the developer solicitors and act on your behalf and also work with the lender solicitors. The lender fees. So there's lots of different names for these lender fees: arrangement fee, product fee, application fee. It sounds like a lot of fees. It's all the same fee. It's one fee that the lender charges to be able to obtain their mortgage. And like I say, most of them can be added into the mortgage, even above that 75% loan to value. So if we are doing 25% deposit and there is a fee there, we can add it on top of the 75%. So you're just paying interest on it, but it is cheaper, on a monthly basis rather than doing a lump sum payment. So a lot of people like to add the fee to the loan. But again, we can have that discussion. If you'd rather pay it up front, we can do that for you as well. Broker fees, so that's our fee to pay. It is an upfront fee where we will act on your behalf and do our recommendation advice and do the mortgage for you. If we can't get you a mortgage, it's fully refundable. So we only charge you if we can help you. And we want to get it right first time as well. So we're not going to say, right, I can get you a 1% mortgage, pay your fee, and then tell you it's 10%. So what we want to do is get it right first time. And by that is if it declined for any reason, we will replace it free of charge. So we want to get it right first time. The letting agent fees. So you will, Andrew mentioned, you'll have your letting agent fees where somebody, you're overseas, you're not here in the UK, there'll be a management company there managing it for you. So if there are any issues with your tenant, if there's needs any repairs, they will arrange that for you, take the rent, and some of them can even deduct the tax for you if there's any tax to pay, so they can manage that for you. Your landlord's insurance. So when you're buying new build apartments, leasehold, actually the leaseholder is responsible for the building's insurance. So that's a cost you don't have to pay. But you can have landlord's insurance. It's not compulsory. So we can have rental protection. It's very rare people do that because people want, well, no properties are empty. The tenants, like I say, are just gone the next day. But if you are scared of a rental void, you can have insurance where they pay you the rent until they find you a tenant. You've also got contents insurance. If upstairs leave the tap on in the bath and it floods, it will cover your home and any damage too. So that is not compulsory, but it's there and part of our service as well. We can recommend that for you. You have your property maintenance, again, what Andrew touched on. You've got your building warranty and you've got your management company that help with that. And then tax on your rent received. So if you are overseas, you're not a UK taxpayer, obviously you'll benefit from that. But your letting agent can also help with the tax. Okay, next slide, please. So the key factors lenders consider when assessing the mortgage eligibility. Your credit profile. I did touch on that you don't need a credit profile to actually get a mortgage. But like I say, if you do build up one, there can be other lenders available for you in the future to show that you can keep up with mortgage payments. You're a successful landlord. They can see the rent coming in each month. So it does open up more lenders, but it's not a must. So we can still help you. Your income profile. So lenders do like to see an income. Like I mentioned, the rent defines how much you can borrow and the rent is covering that mortgage. But if there is a rental void, the lenders want to know that you can pay for it. So they will look at your income and will assess you. Now, some lenders may have a minimum income requirement of £75,000 sterling equivalent, which is high. Some have 18,000, some have 32,000. So your income profile can show us which lenders are available to you. Now, not only that, I know in the poll earlier you were worried about the mortgage affordability. Some lenders not only look at the rent, they will look at your income too, to top it up, to get up to the loan amount that you need, up to 75%. So we can actually look at your income as well as the rental income. Your client experience, a bit like I said on the credit profile, comes hand in hand. Once you've got that experience of being a UK landlord, you're less risk to other lenders. So they will want to, start lending to you. We want to help you grow your portfolio. We want a part of this. Your payment structure, we'll touch on that in a moment about your interest only versus repayment. Very, very popular here in the UK that we've got those two different repayment structures. So I'll touch on that in a moment. Property type. So believe it or not, some lenders may not lend on properties over 10 floors. We don't know why. They can't lend on everything. Some lenders will want a lift if there's more than 4 floors. Some lenders just won't lend to 1-bedroom properties we've seen. Some lenders, it's just crazy, the criteria. But what you need to remember is a lender can't lend to everybody and everything, because then there would only be one lender, because we'd all go to the cheapest. So there are different lenders for the property type that you're buying, for the country that you're living in, the income profile that you have. And the last one, the rental income. As I mentioned, the rental income defines how much you can borrow. That's what they're assessing. But each lender has a different affordability calculation on the rental income. What we do is we advise to either, do you want the best interest rate, but it might mean that you put a little bit more in, or do you want the highest loan amounts that you put the smallest deposit? May not mean you get the best interest rate, but we'll have that discussion with you to see your priorities and advise towards what you want. Okay, thank you. Next slide, please. Okay, the two repayments that I mentioned. We have capital repayment mortgage. So first of all, that is where you are paying back some of the mortgage each month. Your monthly payments will be higher. So in the poll, we saw that a lot of you want the rental income. So based on that poll, I think I'd advise already the interest-only mortgage for you, but I'll go through both. So the repayment mortgage is your monthly payments will be higher, and that's because each month you are paying down that amount that you have borrowed. So let's say we have a 25-year mortgage on repayment. At the end of the 25 years, you will owe nothing to the bank. So let's say we have a £200,000 mortgage and the property is worth 300,000. At the end of the 25 years, you'll have your capital appreciation. Property might be worth 600,000, no mortgage. If you sell that property, 600,000 is yours. However, you're not going to get that much rental income if that's what you want, because you've been paying it down. Very popular for people who want more for retirement. So if you want that income in retirement, you've got no mortgage to pay and you can have that rent in full. Interest only, the most popular by far. You're not paying down the amount you owe each month. So let's say again, we have 25 years and you're borrowing £200,000. At the end of the 25 years, you still owe £200,000 if you've not made any payments off the capital. You think, well, how do I pay that back? If you sell the property in 25 years, again, we'll use the example, it's worth 600,000. You pay the bank 200,000 with no interest because you've paid the interest as long as you've kept the mortgage, and you take your profit of the 400,000 and you say, thank you, bank, there's your 200,000, and you've been making profit from the rental income because your payments are lower. What I do advise a lot of people is with interest-only mortgages, there are usually an overpayment facility, which means you can pay up to 10% of the balance, penalty-free per year. Again, the example, £200,000. That means that you can pay £20,000 off penalty-free at any point. It could be £1,000 1 month, £6,000 in 3 months' time, but you can make lump sum payments to reduce it at your pace. So it means that if there is a rental void, the monthly payment is lower for you to find to pay the bank, but you can pay it down at your own pace and then keep the monthly payments low. And then you may only have £50,000 left at the 25 years, but you've got that flexibility there. So I think that's always a good option and very popular for overseas investors. Okay, next slide, please. Okay, so here's an example actually I did this week. So this was a resident in France. They were buying their first buy-to-let at number 30 in St. Paul's with Joseph Mews. So this was a decision in principle that I obtained this week. So as I just mentioned about interest only, this client wanted interest only. They had a 60% loan to value. They wanted a bigger deposit and a loan amount of 234,000. So the interest rate was 4.83%. However, since then, the rates have actually come down. So that rate is now 4.58%. We are seeing rates fall. So it is common that whatever rate we quote, it will be lower by the time we apply. If the rates change during the process, we will switch it free of charge. So you know whatever you lock in is your worst case scenario. If you're happy with your worst case scenario, you'll be happy. So on this basis, this was £942 a month. Of course, that will be reduced now with the new rate by the time we apply. So the projected rental income per month was 1,700. So you can see the profit there from the rent. They've got the service charge and the letting and management fee. So each month they'll be getting £428, not to mention the capital appreciation as well. Okay, thank you. Next slide, please. Okay, and as I mentioned, the documents needed for us to help and do the mortgage application on your behalf. So your first one is your identification. You need to prove who you are. So proof of ID and address. You are a resident overseas and you are who you say you are. We will also do some compliance checks and anti-money laundering checks as well using your ID. Just for compliance, like I said, we are regulated, so we will do our checks. Property information. As I said, some lenders lend to certain properties. So I'll need that information to make sure the recommendation not only lends to you, but to the property as well. So we'll get a valuation report during the process as well. And we'll take all those property details from you. We'll also work with Joseph Mews, who will give us those information. We'll make it as stress-free as possible, but we'll come to you for the information that we just can't get, like your bank statements and your ID. Deposit requirements, as I mentioned, you need 25% of the property value as a deposit. Higher deposits can be required for non-residents if you want a better interest rate or another lending option. Again, we'll have that discussion with you to say what's the maximum you want to put in, and I can have a look at all those options for you. Your financial strength. So credit report from possibly your country of residence. Some lenders just don't ask for them at all. Income statements, so last 3 months pay slips. Any tax returns in the UK, if you already have a property here in the UK and you're declaring that income. And then if you're self-employed, you would need around 2 years worth of accounts minimum. So that would be an accountant certificate or proof of your income. The UK bank account. So like I say, you'll need that UK bank account, but we will help you with that. Please don't worry, I will guide you. You can have my personal WhatsApp at any point of the day. You can contact me. I will guide you and help you with that. And then the legal and regulatory compliance. So understanding UK property taxes, including the stamp duty, seeking legal advice on property laws and tax implication from non-residents. Your solicitor will help you with that, who will also be allocated to you. Brilliant. Okay, I think that's my last slide. There we go. Okay,
Brilliant.
Back over to you, Andrew.
Thanks, Faye. Very interesting. Couple of things to pick up on. I just think I had a friend actually that did an interest-only mortgage. He bought a couple of apartments, 2 apartments, for £1 million 11 years ago. He's just sold them for £2 million. So he's taken £1 million profit. And of course, because he had an interest-only mortgage, he was making money, quite a lot of profit per month. So again, that goes back to potentially some of you out there that are looking more about the rental yield. So I'd say probably 95% of clients go for interest only for the reasons that Faye's mentioned. I think can be a bit daunting. There's a lot of moving parts, fees, taxes, charges. They're all modest, and we have, which we can share with you by developer, we have detailed cash flow summaries. So it's all very well and good at looking, yes, getting you £2 a month, but you've got your different fees, charges. So we can come up, we've got a pretty simple A4 spreadsheet, which covers stamp duty, it covers everything, furniture, legal fees, solicitors' fees, mortgage costs. So you can see a true net figure, which is I think important for those interested in the maths. So I think we all should be if we're looking to invest in property. And again, on the example, and it was only a small point, but on the example that for 30 St Paul's that Faye showed, where you looked at the sort of the net returns, we were working on a 6% gross rental yield. Actually, in that area, we're near a 6.5%. It's fine. It's just, it's only going to be more positive. And that particular development isn't ready to Q1 next year. So we're seeing the rents going up as well. So that's a double effect there. And again, part of our service, we mentioned, we've got lettings partners, and for that example, we just had a 10% letting and management fee. Well, we're around about the 8% mark. So again, little things that, when you're talking percentages on 200,000 or 300,000, it can amount to quite a lot, and really, particularly over a long period of time, can have a sort of big effect there. So yeah, thanks for that. Really, really good stuff. Yeah, so let's have a look at locations. I'd argue we not only do we work with arguably the best developers in the UK, but we only choose stock from them or work with them in terms of giving us the best location. So mentioned, we look at good rental yields, 6.5% in Birmingham. We also look at strong capital appreciation, and Birmingham's a case in point where 30 St Paul's is. You talk about connectivity. There's new tram lines going in as we speak, and we've got the new HS2, the new high-speed train. Now, it'll be over budget, and it'll be delayed. Unfortunately, that's the UK, but it is coming. You drive up and down the motorway, they're building the station in Birmingham city centre. That's going to make a huge difference. Instead of an hour and 40 or 40 odd minutes direct to London, Birmingham is already the #1 location for people relocating from London, because you've got all the institutions there, you've got the jobs and the markets there, massive regeneration. And if you look in Birmingham, you'll see a lot of cranes, but it's all infrastructure and public realm and offices. And again, we've got a shortage of stock. There's planning, the requirement, according to the Office of National Statistics, is something like 4,800 homes in Birmingham are needed per annum. There's only planning in at the moment for 1,800, and that's year on year. So again, it's a perfect storm, really. Massive shortage, high demand, high paid jobs in Birmingham. HSBC have left Canary Wharf. Half of their business is now in Birmingham. Deutsche Bank are there. You've got all the PLCs. BT have just taken an office block, 4,000 for 4,000 staff. You've got Arena Central, Paradise Circus, 17 office blocks newly constructed. So yeah, it's always good to do a bit of research. We do that because we only want to work, build and develop in those areas. So there's a lot to look at when looking at particular locations. Could argue some are a little bit flooded. I wouldn't say flooded, but with a lot of our developments, there's some big developments out there where you might get 1,000 apartments, and they're all full of investors. We tend to limit and work with homeowners as well, which is nice for the development and good for the sort of integrity of the development as well. If I could have next slide, please. So again, we look at average property price. In some of, we don't develop in all these areas, but in some of the areas we develop in. And again, look at the 5-year, look at the average rental yield, and look at the 5-year price prediction. Again, Birmingham, strong regeneration, HS2, growing population. Birmingham's the second biggest city in the UK, has been neglected, which is good because there's 16 billion of investment coming in as we speak. Some of it's happened, some of it's happening, and there's more to come. You've got Derby, again, nice and affordable. In fact, we've got we've got apartments in Derby from 140,000. Again, we're pushing nearly on those just over 7% rental yield. So not only do we go in areas where the average rental yields are high, because the quality of our development and the location within the city, we're getting higher than the average rental yields, and that has a knock-on effect to the price increase as well. So again, Leeds, strong economy, growing student population, major transport hub, lots of regeneration. So all the kind of things as investors we'd want to see, because we mentioned earlier, you could stick your pin in a map and say, well, it doesn't matter, property prices double every 13 years. Well, you know, we can do a lot better than the average. And as you say, the audience was interested in rental yields, so we go for areas that give the most. What we see as well, the bottom one there, London, average property price is high, 670,000. Average rental yield is low, as is the price prediction. We do Ascot, which is sort of London commute about out by Heathrow and the M25. Again, you're not getting the rental yields quite, and you're not getting the prediction, but a lot of people just like the area and like to have something in London. And we see, particularly with overseas investors, it's more London. It's London, it's a trophy asset. We've 73% of our investors based in London are investing further north for the capital, for the lower price point, and for the better capital appreciation. Because something in London at 600 grand, can you see it going to 1.2 million possibly? Where something in Derby at 140, can you see it going to 280 in 10 years? Definitely. So this is what I was mentioning earlier on. We want to go top left. We want to have our cake and eat it. We want the highest average rental yields, and we want the lowest price point. So again, when we look at our net returns, it's giving us what we want. If we're making money on a monthly basis from the rent, covering our mortgage, giving us a nice profit, and we're benefiting from the capital appreciation when we come to sell as well. If I could have the next slide, please. Okay, I'm just going to talk about a couple of our developments. I'm just going to pick on the Birmingham City Centre one, which is number 30 St Paul's. We launched it about a month or so ago. We're about 30–40% sold, I think. It's gone really well. If I could have the next slide, please. It's right in the heart of the city centre. It's it's kind of well, it is the Mayfair really for those that know London. It's the Mayfair of Birmingham. Got a lovely green square. Our office is on that square. The developer's office is on that square, and the development is on the square. So you can see, I don't know if you can see the building on the left and the right are the two parts of the building. They're joined internally. In the middle is an art gallery and some offices there. And it's got a massive green. It really is almost like a village, but within the city centre. So it's a prime location. Price is from £250,000. 20% deposit is required. So you put 20%, you say you pick a particular unit, you'd pay 20% on exchange, which is during about 28 days. Average rental yields, as we said, 6.5%, and increasing. And this one's well underway. It's going to be completed Q1 2026. If there are any people in the UK who can get over, we've got a show flat in a sister development that the developer's completed, and we can get on site as well. So you can see the views from the terraces across the square, and you look into the sort of central business district, and this is in the Jewellery Quarter, which is quoted by the Times as one of the best places to live in the UK, not only in Birmingham. Next slide, please. Again, Mayfair of Birmingham is the address. We've got a lot of famous people in and around the square, and famous people actually that have bought here at 30 St Paul's for their own use, or for a sort of a pied-à-terre, you know, to use at the weekend. So we've got not only investors, we've got homeowners there as well. That's due to the location. If I can have next slide, please. Thank you. Again, we can send stuff through after, so apologies if it's a bit small to see, but what we wanted to show you, it's right in the heart of the city. It's near the trams, it's all walkable to the trams, 3 or 4 train stations, all the key areas I talked about, HSBC's headquarters, the mailbox, the Cube, all the main elements, everything within the city centre is walkable from 30 St Paul's. Again, we can send over more information. You'll be able to see the map for yourself in more detail. If I could have the next slide, please. Thank you. Again, it's what I was mentioning earlier. On the left-hand side, you've got the old part of the building. It's an 1850s square. So we've kept the facade of the building. Planning, it's all low-rise. Planning is very restrictive. We've got high-rise options and other options as well. But this is we've kept the facade, and it's all new build behind the development. Behind the art gallery in the middle, it's like an open courtyard. We've got parking options underneath as well. So it's a super development. Next slide, please. This is the courtyard. So this is the internal area. You've got the spiral staircase, which takes you down to the underground parking. Nearly all, whether on the front of the building or in the internal courtyard, have the outdoor space. It's secure, it's gated, but there's balconies, terraces with nearly all the apartments. There's just 1 or 2 that don't have the outdoor space, which again, what we're seeing, what the modern tenant wants. Next slide, please. Again, we can fly through those, just some internal shots. Can never tell if they're real photographs or computer generated images. Let's go through a couple of those, and then here we go. Again, we've got show apartments, we've got videos, so if people are interested, we can send more information. That's the square that we look over the square. 9 Michelin star restaurants within walking distance. Middle center there, you can see the green square that I mentioned. So it's a beautiful, beautiful part of the world. Next square, please. Next slide, please. This is Elevate, which I mentioned. They've delivered over 1,000 homes and apartments. This is our sort of second development where we're working with them. And again, fantastic track record. Always deliver on time. They're phenomenal. And again, we're on target with 30 St Paul's. Next slide, please. Just going, this was from the launch that we did a month or 2 ago. So this is our chairman on the right and the chairman of Elevate on the left. And Andy and Steve go back about 20, 25 years. It's the first time really, or second time really, we've worked for them, and it's just work with them. So as I say, we partner with them to offer all the back end services. And next slide, please. And again, we have Derby options ready Q1 next year from 148,000. Again, strong story there. And if anyone wants to talk about any of the different developments, we can. There'll be a form you can tick in a second, and we'll be in touch whether it's mortgage advice or help or anything to do with property. We've got Area House in Birmingham starting from 170,000. Chapman's Yard in Birmingham starting from 289,000, ready later this year. So some stuff's ready sooner, some stuff's ready later. I've got the housing, which is Leeds Commuter Belt. We're there from 159,950. That one's suitable for short-term lets or serviced accommodation, so it can potentially give a much higher rental yield. Not all developments allow it, but for people that like the serviced accommodation or the Airbnb model, there's an option there. We've got Heatherwood Royal, which is Royal Ascot. You probably can't tell from the photo there, but it's right on the race course and one of the only developments in the area because this is a brownfield site. Everything else is built and there's no planning in the area. So for those that want the sort of London commuter belt, there's an option there, but we can guide clients by budget, by location, and also when that development is ready. I think maybe waiting a little bit is probably not a bad thing until it's ready because we're seeing, as Faye was saying, mortgage rates coming down. So we're getting more competitive there. If I can have the next slide, please. Thank you very much. So we'll come on to the questions in a second. So thanks for sending those in, which is great. And we've got a special offer. So anyone reserving with us or booking an appointment and then reserving with us will get £1,000 towards legal fees. So register and we can we'll contact you afterwards. And if I could have the next slide, please. Okay, and the next slide. So just we'll come on to Q&A in a second and we'll leave this on the screen, but just tick the box there if you'd like to know more about our current investment opportunities, a lot more detail, mortgage options, or if you'd like to discuss anything to do with the property market. I've been investing, I don't want to say, but a lot of decades, 4 decades and more. So more than happy to share that experience with you. As I say, even if you just want to talk about how to get started, all sorts of options there. So please tick the box and then we'll come back to you probably tomorrow now, looking at the time, particularly if you're +1 or 2 hours ahead in Europe. Okay, so I've got a couple of questions, so thank you for that. So anonymous attendee, this is probably one for you, Faye.
Yep.
Can one jump from capital repayment mortgage to interest only mortgage and opposite during the mortgage period at any time?
Absolutely. So what's good about the UK is it's not like a lifetime mortgage like in Switzerland or anything like that. We can change to your circumstances. So let's say the rates as of today might be a little bit higher than they would be in 2 years. What you could have is interest only for 2 years. And then when the rates are lower, we'll review your mortgage, lock you into a new lower rate, and we can change it to repayment. So it's very flexible and it will be reviewed every couple of years. We will be in touch with you around 3 months before your rate ends to have a talk, see how it's going for you. Is there anything you want to change? So yeah, and we can do both options.
Brilliant. I think we've covered another anonymous attendee just about rates. I know, how long's a piece of string? What do we think? Any ideas of where we're going on the rates?
Well, inflation is coming down. It's working. So as long as inflation keeps coming down, we don't have a crystal ball. But the rates that we've got at the moment, although they are coming down and people are, happy with them, they're still a little bit higher than what we'd like. So we do anticipate that they will balance out as long as inflation still keeps coming down. We've had a really good forecast that we are expecting 3 more base rate cuts by 2026. So
okay, cool.
So yeah, we should be there. So yeah, very exciting times. For a UK resident today, I got 2.71%. So it just shows you that the lenders want to lend. They do. They really want to lend. They have targets too. So they want to lend. So we're getting there. So yeah, it's very promising.
Brilliant. That sounds good. I think another one for you. we've touched upon, and we have other webinars in the past talking about sort of structuring in using a limited company. I've got a question here. Does that affect rates or choice or anything along those lines that we should be concerned about or be aware of?
Yeah, so apologies, I didn't touch on the limited company. It's very, very popular. So limited company now, it's like a tax wrapper. It's brilliant. Very, very popular. The high street banks don't really lend to limited companies because they don't need to. They've got all the residential mortgages that they need. But there's lots and lots of lenders out there that do the limited company. You don't have to have the limited company trading for 2 years that some myths have. You can literally set up the limited company, get your bank account, and we can apply. All the directors have to be on the mortgage and shareholders typically, but the rates are actually the same. If the lender lends to limited company and personal, the rates don't differ. They can't entice you into doing something. Just like interest only and repayment. Some people say, well, is it cheaper on interest only? Only the monthly payment because you're not paying the capital. The rates are the same. It has to be fair and transparent because they are, regulated banks as well. So what it means is they can't entice you. It's what is best, and our advice to you is best for you. So if limited company is the way forward, if you're going to buy multiple properties and you're building a portfolio, then a limited company is a really good tax efficient way of getting the most from your property. So you can offset the mortgage interest off the tax as well, where you can't do that in a personal name. So very popular, but no penalties to do so.
Good, thanks for that. Because we've got 10 partners we work with that can advise on, structuring limited companies. For most people in the UK, it's worthwhile. But again, everyone's tax situation is different, and we have a third party that can help there. And as well, there's things that you can claim, and we also allow sort of contract reassignment. So you might if you exchange on a property today in your name, you don't need to complete on it for, let's say, 18 months. You can decide if you want to put it in a limited company. Probably best to get it right day one, because you just have probably £200 or £300 in legal fees for changing, but you're not sort of painting yourself into a corner, as long as you're not physically completing on it now and contract reassignments allowed. I've got a question from Stephen, kind of moving on from that. Stephen King, thank you. We have a UK rental property and own personally, but we've now moved abroad. Are you able to advise on tax efficient ways to manage this, i.e. changing to a limited company ownership? Again, we can get the right advice. However, if you're setting it up as if you're moving to a limited company, you're going to have to pay any sort of capital gain, and you're going to have to pay stamp duty because it's a new sale in effect. However, if you're, again, not knowing your situation, if you're moving abroad and you're not taking, you've got a tax-free allowance in the UK, maybe if you've got a partner, of sort of £12,500. So again, if it's just one property and moving into a limited company may not be beneficial because of the stamp duty. Depends how much you paid for it, how much it's worth, capital appreciation, etc. But again, tick one of the boxes. I can always get one of the specialists to call you. Again, free consultation, and they'll give you the right advice there as well. Clary, can I please have the recording sent to my email? I need to review it with my husband. Yeah, we can do that. Everyone that's attended will get a copy of the webinar. So yeah, thanks for that. Another anonymous attendee, can you please indicate the cost beyond UK property purchase price, which costs are one-off and which are per annum? Okay, so you buy the property, obviously you've got your mortgage setup costs, you've got to pay your mortgage. The main setup costs are things like stamp duty, and again, depending your circumstances, we've got different calculators, and a cash flow summary will give you exact figures, but you'd have stamp duty, depending where you are, can average sort of 5-6% stamp duty, land tax. The ongoing cost would be mortgage. The tenant is paying for all the utilities. You're just paying for the service charge, and service charge is expressed normally in something like £2 or £3 or £4 per square foot. And the service charge covers sort of everything outside of your front door. of your apartment to the perimeter of the building. So lifts, if there's any facilities, building insurance, etc., etc. So there are some fees and charges there. How long's a piece of string? You know, once you've had your, you know, as a rule of thumb, depending on the development, once you've paid all your costs and your charges, you should be £200, £300, £400 plus a month, you know, in terms of, you know, your net return. That can be quite a bit higher if you're doing things like serviced accommodation. There are higher costs with service accommodation, but it doesn't really matter what the costs are as long as your net is a lot higher. Some people don't like the service accommodation because it can ebb and flow. But again, there's ways of sort of mitigating that as well. So thanks for that. So just have a look. Oh yeah, this is probably one for you. Can I pre-qualify for a mortgage before identifying a property as a non-UK resident?
Yeah, absolutely. It's called a decision in principle or an agreement in principle. It means the same thing, but what we'll do is in-depth assess you and pick the best lender for you, not the property. As I mentioned, we'd have to match the property and make sure that it's suitable for the lender. But what we can do is give that information to the lender to say, based on the information that you have, you're happy to accept an application. So it gives a certificate of confidence. There's no guarantee, of course, no mortgage is guaranteed until it's underwritten. If we do you a decision in principle today and you lose your job in 6 months or your circumstances change, it wouldn't be valid. But as long as your credentials and criteria is exactly the same by the application, there's not going to be an issue. But we can always, you know, touch base. You can have a call with me 100 times if you need to. Any questions or you want to keep reviewing to make sure the lenders are there, I'm happy to do so.
Yeah, because with some of the products, some of the developments, it might be if it's, you know, 18 months away. So at least it gives you, Faye can give you a bit of peace of mind. If your circumstances remain the same, you know you're going to get a mortgage. If you lose your job, then obviously there's an issue. With those long-term sort of deliveries, obviously buying off plan gives you're buying at a better price. You get choice. Once we get 6 months into development, everything's sold out and the best stuff's gone anyway. So it's quite nice to get in early. You're fixing your price and the development's working for you. Obviously not on the rental yield, but you've only put 20% down because you exchange on 20% and it's working for you in terms of capital appreciation. And we have what I call a get out of jail free card, which has happened. If something catastrophic were to happen when you put your 20% exchange monies down, and you lose your job or you can't get a mortgage because whatever, then we allow contract reassignment. So we can sell that property on for you. And when that has happened, touch wood in the past, we've always managed to sell that property on to an incoming client. Sometimes we've even returned a profit because, of course, the property prices have gone up as well. But yeah, that's a potential there. Antonella, don't you manage properties in London? No, we don't. We work with third parties who manage properties, but we only manage in areas that we build in where we develop. As I mentioned earlier on, we've avoided London just because it's expensive. You're not getting the capital appreciation, and you're certainly not getting the rental yield. You might struggle, you know, depending where you're buying, you might struggle to cover your mortgage, even interest only in some areas of London. So we've got Ascot, which is the closest we've got to London, where we're comfortable with because it will give a good return. But no, nothing else in any other area. But contact us or go on the website, and we can run through different options that we have. I think that's it. I don't think there's any more questions. So I'd just like to say thank you everyone for attending. We'll drop you an email if you've asked for more information. And either myself or someone from my team or Faye or someone from Faye's team will be in touch if it's a mortgage question. And we'll send you all a copy you'll automatically get a copy of the webinar. Lovely. Thank you very much indeed. Thanks, Faye. Thanks, Anjana, for running the slides, and hopefully see everyone soon.
Brilliant. Thank you, everybody.
Thanks. Bye-bye.